Morning, listeners. Welcome back to Almus Market Mornings with Shikhar Garg. And folks, we have been hearing India being preferred by a lot many international players. And right after Apple setting up their line in India, we have another major player, Google Pixel, scouting for suppliers for the production setup in India. Now, this is the kind of interest we are developing when it comes to Indian markets, and we have already seen quite good macro numbers being posted. On the other hand, our counterpart, Chinese Central Bank, further cuts rates yesterday because of the less than expected growth rate for the economy. And we see Chinese yuan currently trading above 7.20 levels. So this was the kind of setup for the Chinese markets. And on the reaction side, we have also seen the indices reacting, international indices reacting quite well for the developments across financial markets. So, JK, I'd like to hear from you what are such developments and what should we be expecting out of financial markets?
Good morning, Shikhar. I think Chinese rate cut was not greeted with any cheers yesterday, and in fact today also, because market is waiting for a much larger stimulus package, which is still missing, and possibly indications are that this may happen only in July. That's something that the market is trying to discount, that the package is not going to be announced. Overall, the markets have been subdued because of anticipation on Powell's testimony today and tomorrow. We have UK inflation data today, some moderation expected, but not so much to change the view on the MPC rate hike tomorrow. Debate going on between 0.5 and 0.25. Possibly now majority preferring a 0.25. And important thing would be how far they're going to go as per their forecasts. Now, if you look at the monetary policy itself, it's become quite volatile in the sense of, Canada and Australia paused and then started rate hikes again. But minutes from Australian Central Bank yesterday showed that they even considered again pausing. So market actually reacted thinking, the next move may be a pause. That's why the Australian dollar fell in yesterday's trading. But if you look at UK gilts market was the leader for the yields yesterday. UK gilt yields fell substantially on both 2-year and 10-year. And this is because some people are expecting the UK inflation to drop more today. And even the ECB members were mixed on their statement, some hinting that possibly we are mostly done, while one member said that I won't be surprised if there is a hike even in September. The ECB's member Schnabel, who has more influence, he said that they would rather err on the side of doing too much rather than doing too little. But interestingly, what I observed, we have been talking a lot about the yield curve inversion in the US, but actually the yield curves have been inverting even in Europe and UK as well. The UK 2 to 10-year yield curve is now the most inverted since 2000 at minus 76 basis points. And in the UK, in Europe also, it is at the deepest since 2010. So there is a sense that, while they are fighting the inflation, to sustain the credibility of the central bank, the growth picture is definitely getting muddled, and we are really running a risk of stagflation or a deep recession in these two economies as well. Of course, in US, we have very mixed picture on the economy. Speaking of economic picture, yesterday we had the housing starts data, which is beat record coming at 21.6%. It was a big surprise because market was expecting a minus 0.7%. And this probably has been helped by some special factors because one of the factors at play is that the existing home sales are going down, and people holding the homes right now are not ready to sell. So this, and also the cost of construction due to supply chain issues improving has also come down. So the housing activity has actually picked up. This can actually further reduce the housing related inflation. So that's a good news. But on the other side, there was a non-manufacturing, business survey in the Philadelphia region, where the overall index came down slightly, but the price indices decreased quite a bit, both the received and the paid prices, and this is actually a good news for Fed, which is looking for more moderation in inflation. So overall, the picture of economies in the major countries is definitely muddled, and inflation is not falling as much as they said, but it is hoped that it will fall in the coming months. So it gives again a picture that we are much closer to the peak in rates in these major economies, but we need really a confirmation from the inflation numbers going forward. On the dollar itself, it is stuck in a slight narrow range because of the expectation on Powell's testimony, what he would say, whether he would say something different from what he said last week on the policy front, and also the UK inflation number, which might actually be a leading indicator for the yields in the market. Also, stock markets have taken a slight beating yesterday. Once again, it's profit taking that has continued after the big rally that we have seen in the last several weeks. Yes, on the Indian side, as you said, yes, there are a lot of money being dedicated to investment in India, and the news about Micron chips investing in India, which is officially yet to be confirmed, is something to be cheered about. And I mean, there are lots of long-term investments that are planned for India, and that is this is nothing but what a realization of what market was expecting about a year back, after China's problems on the global supply chain issue. So this is good for the rupee prospects as well as the overall economy, because it adds to our improves our employment picture as well. And rupee, in fact, has slightly weakened yesterday, just going along with the Chinese yuan weakness. But overall, if you see, rupee has not weakened much, nor strengthened much, due to the efforts of the central bank keeping it in a very narrow band. It looks like I think upside for the USD/INR is still capped at 80 to 20, and with so much of inflows in the pipeline, and rupee not trading too far away from the all-time lows, I don't think we can expect too much of weakness as well. And as and when the central bank is ready to let the rupee appreciate, we might see a large move on the downside. Thank you.
Okay, quite interesting, JK. And yes, we have been hearing a lot of investments in India, and as JK mentioned, it's all positive for the economy when it comes to employment and the kind of activity it generates in the economy. But having said that, with the developments in the overnight markets and yesterday's actions we've observed, Asian PAC has weakened against the dollar to some extent. And do we expect the same in case of rupee? It's as JK mentioned, we can expect some bit of selling to come in, although we have quite strong presence of the central bank managing the volatility for the currency. On the international side, we have the UK gilts falling, but quite interestingly, the yield curve inversion for the UK and Europe has also been quite high. I mean, we are at multi-year high for the inversion spread, and it's been only the US yields, which inversion of yields, which the financial markets have been constantly talking about, but we have also seen quite deep inversion for UK and for Europe now. From the other continents, we have the Australian central bank RBA in its minutes of the meeting reinstating the possibility of a pause in the next sessions, while the financial markets continue to expect a much larger stimulus package for the Chinese economy, which although is unlikely for to be seen in the month of June. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening.